Fusion Mobile, quality e-learning experience on the go.
Departmental accounts are accounts relating to more than one department. Sometimes the owner of the business might want to ascertain the trading performance of each department, and as such there is a need for departmental accounts. Here separate books are created for stocks, for purchases, sale returns and wages, so as to ascertain the performances of each department. The essence of keeping departmental accounts are: 1. To ascertain the gross profit of each department. 2. To ascertain the net profit of each department. 3. To ascertain the area of weakness of each department. 4. It will also enable management to make decisions that will enhance better performance of the business. Sometimes departments can transfer goods to another department. In such instance, two cases must be considered. The first, when goods are transferred at selling price. When goods are transferred at selling price, the issuing department cannot credit sales. As such transaction will be treated as normal transaction in the books of the receiving department and the issuing department. Second, where goods are transferred at cost. Here, an account called goods to other department account must be opened. And in this book, the transactions will be recorded by the issuing departments as follows. 1. Debit goods to other department accounts and credit purchases or stock accounts. In the books of the receiving department, the transactions will be recorded as follows: debit stock accounts and credit goods from other department accounts. Apportionment of indirect expenses. Usually in departmental accounts, some expenses can be jointly incurred by all the departments, and as such there is a need to apportion these expenses so that it can be divided equally or at the rate at which they are being incurred. When apportioning indirect expenses, it could be by means of direct analysis. That is, example is salaries of departmental heads. Second, it could be according to the amount of floor space occupied by each department. That is, rents, rates, cleaning, etc. Third, it could be in proportion to the sales or turnover of each department. For example, advertising and sales commission. And last, it could be according to sales quantity. For example, maintenance of delivery van, cost of loading and offloading. However, cost apportionment should be applied when dividing indirect expenses among the various departments. Now, another method that can be used in apportioning cost is using contribution approach as a performance indicator. Here, contribution equals to revenue minus direct expenses.
Fusion Mobile, quality e-learning experience on the go.